Hello. I've been in the crypto space for a very long time, but this is the first time I've seen something like this. We are currently witnessing an attack unlike anything we've seen before, an attack by one cryptocurrency targeting another. Today, I want to tell you about a mind-blowing economic attack that is currently being waged against Monero. Monero, the privacy-focused cryptocurrency with a strong reputation and a large market cap, around $6 billion, is being targeted by a much smaller project called Qubic. Qubic is significantly smaller in comparison, with a market cap of around $270 million. It presents itself as a high-performance blockchain integrating mining not just for securing the network, but also for enabling other use cases such as artificial intelligence and other computational tasks. But what's happening now is absolutely astonishing. If you go to Mining Pool Stats, a site that tracks the mining pools and their share of the total hash rate, you'll see something remarkable under Monero. One of the top mining pool is Qubic, which now controls approximately 25% of Monero total's hash rate. It is enormous, and this share has been increasing ever since Qubic made a major announcement. On June 9, 2025, Qubic released a press statement announcing that they had successfully developed a tool that allows miners to mine Qubic, Monero, and another cryptocurrency called Tari simultaneously using the same software. This means that instead of choosing to mine only Monero, miners can now mine Monero, Tari, and Qubic at the same time, boosting their rewards and overall profitability. But here's where it gets strategic, and why I'm calling this an attack. All of the Monero and Tari tokens mined through this method are being sold off to buy USDT, and that USDT is being used to purchase Qubic tokens, which are then burned, taken permanently out of the circulation. This creates a powerful positive feedback loop for Qubic. As more miners join in, more XMR and Tari are sold, more Qubic is being purchased with the proceeds, and more of it is burned, reducing supply and potentially increasing value. It's a clever and almost devilish mechanism. They're using economic incentives to lure miners into joining the Qubic pool, effectively encouraging them to dump XMR, and Tari for USDT. They buy Qubic and burn it. You might ask, but how are Monero miners being compensated if they're dumping XMR? Well, they're also mining Qubic simultaneously, and they're rewarded in Qubic tokens, often earning even more than they would have by mining Monero alone. So from a miner's point of view, it's highly profitable. And do you know who's behind Qubic? It's CFB, the co-founder of IOTA, and he's being very transparent about his intentions. He has publicly stated that the goal is to dominate with the Qubic pool, aiming to surpass 51% of Monero network's hash rate. If they succeed, they could block blocks mined by other pools, effectively monopolizing the block production on the Monero chain. That would leave the other miners with no choice but to join the Qubic pool if they want to earn any rewards at all. This entire operation seems to serve multiple purposes. It's a marketing stunt that's getting everyone to talk about Qubic. It's also an economic move that drives buying pressure and reduces token supplies through burning for Qubic. And it's a technological showcase, proving that the capabilities of a Qubic mining system, which could, according to the claims, be adapted for AI tasks like training machine learning models in the future. It's a stunning and strategic maneuver, one that combines economic incentives, technical innovation, and aggressive marketing. Whether it's brilliant or dangerous depends on your perspective, but it's undeniably fascinating. This is quite an original strategy, and it seems to be working. As I mentioned, Qubic has already captured 25% of the mining market share, and people are starting to get nervous. What's even more concerning is that the project's founder has announced that he might go into stealth mode by no longer disclosing the hash rate, which would make it significantly harder to track mining dominance, just like what we're seeing here. That would further obscure how much market share Qubic controls. Miner will still begin to notice. According to him, this is also undermining the anonymity of Monero's validators. Why? Because he questions why more people aren't joining Qubic's mining pool. His answer is that their pool isn't entirely anonymous. This Qubic pool is not entirely anonymous. There's a bit of an identity verification involved, and that's a big deal for Monero's validators. He suspects many botnets are currently mining Monero across different pools that aren't Qubics, and that these operators don't want to switch because it would mean revealing too much about their identity and potentially some illegal stuff they're doing. So we're clearly witnessing a direct aggressive attack. Honestly, I've never seen anything like this in crypto. Nothing. This is completely unprecedented and it's still ongoing. The real question is now, how long can this go on? What will Monero miners do? At some point, they have to react. Maybe initiate a fork, maybe block something, because they show clearly the vulnerabilities of proof-of-work systems. Right now, it's Monero, a relatively small cryptocurrency with 6 billion market cap comparing to Bitcoin. But it's demonstrating how economic incentives can be used to redirect hash power to another crypto, creating major security risks. Now think bigger. What if this kind of strategy were applied to Bitcoin, the largest proof-of-work crypto? It's a much larger network, of course, and for now, I don't think there is a big short-term risk. But long-term, as mining rewards continue to decrease, Bitcoin will face growing security concerns. There will need to be alternative forms of compensation for miners, through fees, for example. But in my opinion, this kind of attack scenario is one of the critical black swan events that could hit Bitcoin in the future. Imagine someone trying to pull this off on Bitcoin, but with even greater financial firepower. Again, I'm not saying it's likely, but it's possible, and it could cause damage. Now, does that mean Bitcoin should switch to proof of stake? Personally, I don't think so. Each system has pros and cons. I like that Bitcoin remains proof of work while Ethereum is now proof of stake. Two different visions. The key difference is this. In proof of stake, validators have their own crypto at stake. If they try to manipulate the system or harm Ethereum, they lose their stake. There's an economic disincentive to cheating. Why risk everything to gain a few percent if your token price tanks? That kind of economic balance doesn't exist in proof of work. In proof of work, miners use equipment which can easily be redirected to mine other cryptocurrencies. That's where the danger lies. We need to keep an eye on this. Right now, things are shifting fast. Qubic's mining pool briefly reached the top spot. They were number 1, then dropped to 4th. It's very dynamic. Their position now is slightly lower than when I start recording, but the risk is very real. This mining pool is aggressively capturing market share and slowly strangling XMR. For now, there's no direct risk to Monero transaction privacy, its core feature. That's why the creator of Qubic say it's fine, it won't impact XMR price, because users who values Monero's privacy features won't care much about the mining pool drama. But this situation is worth watching closely. It's an economic attack, and it could set a dangerous precedent. Anyway, they will still be able to send confidential transactions, and that remains true. There is no immediate risk in that regard. However, once more than 50% of the total hash rate is controlled, we could start imagining other type of attacks. But that's another discussion. For now, I'll just say this. In my view, there's a real risk. I'm issuing a warning on Monero. That's what's currently happening is quite dangerous. That being said, Monero is doing well, despite everything going on with Mika in Europe, despite the ban on Monero from numerous platforms, it continues to thrive. That's because it serves a real purpose. It's one of the few cryptocurrencies where all transactions are confidential by default. There's no leakage of information, and that's a huge advantage for Monero. So that was a deep dive into Monero, but I have a lot more to share today. There's been a flurry of activity in the crypto market today. BTC is at almost $120,000, Ethereum $3,800. The markets remain quite elevated, and look at BNB. It reached today $850. I'll talk more about some big news related to BNB in a moment. Just a reminder, there are a lot of news, so be ready. I'm gonna start with Solana. What we're seeing is pretty strange. The founder of Solana is openly criticizing the Solana ecosystem, calling meme coins and NFTs digital slope. The term slope is often used in the AI space to describe low-effort, generic spam content generated by AI, like those repetitive AI images we've seen everywhere. So calling something digital slope is clearly not a compliment. It's odd to see the creator of a blockchain criticize what is arguably one of the blockchain's most active and successful use cases. But it's not the first time we've seen this. Vitalik also expressed frustration with Ethereum being dominated by financial use cases, saying he wanted to see more non-financial application on Ethereum. It seems that blockchain creators are often unhappy with how their networks are actually being used. In my opinion, what's happening with Solana is an effort to reshape its image, to move away from meme coins and NFTs and instead position itself as a more serious institutional-grade blockchain. Wall Street isn't going to be impressed by Pump.fun or dog-themed coin. Solana wants to appeal to a different audience, and that's what this messaging shift is about. As for Ethereum, you all know I love this project. I've never hidden it. And the Ethereum ETFs continue to attract massive interest. Over the past 2 weeks, more than $5 billion has flowed into this fund. That's a huge signal of growing institutional appetite. There's more. Chaplin Gaming, a company I've mentioned before that's been accumulating ETH, has just appointed a new co-CEO, Joseph Shalom, the former head of crypto strategy at BlackRock. He was involved in the BlackRock crypto initiative and is very well connected. Chaplin's goal is clearly to bring Wall Street into Ethereum, much like MicroStrategy did for Bitcoin. This is a major, and based on the publicly available information, he'll be earning several $1 million per year. So clearly, this is a major hire. This industry, crypto finance or BlackRock, pays really well. Another firm, BTCS, just purchased $55 million worth of ETH. They currently hold 70,000 Ethers. So yeah, this trend continues. As I said before, there's an ongoing race surrounding Ethereum. We've talked about Chaplin Gaming, Bitmine, BTCS. Bitmine holds over $2 billion. I'd already mentioned that. If we look at this website that tracks the Ethereum strategic reserves on companies or other entities, we can see that Bitmine remains at the top among companies holding the most Ether. Chaplin is in the second place, having increased the holding to 400,000 Ether. Even though this tracker is does not show the real number, it's going to be updated later. What I want to say next is Galaxy Digital. Let's move on to the whale that sold its Bitcoin. Remember the 80,000 BTC? I had mentioned that Galaxy Digital had received those Bitcoin to sell. Well, now they've confirmed they did indeed sell them. We did see a slight market dip. BTC dropped briefly to around $115,000, but that drop was quickly absorbed. Bitcoin has already rebounded to higher levels. So in the end, even with 80,000 Bitcoin, roughly $9 billion being dumped on the market, the impact was limited. Yes, prices are slightly down today, but nothing major. BTC is still trading at almost $120,000. The sale was mostly handled OTC, over the counter, although a portion reportedly went through exchanges, which could explain the brief dip. Now let's talk about BNB and the good news about BNB. BNB just hit another all-time high, soaring above $850. We've also seen more companies buying BNB. Win3 announced they plan to purchase $520 million worth of BNB, an enormous sum. Also, according to Cointelegraph, CZ reportedly holds 75 billion worth of BNB. That's massive. And here's where I have to sound a note of caution. There is significant centralization around BNB. Binance and CZ control a large share of the token supply. CZ is incredibly wealthy in BNB. While it's not in their interest to tank the price, it's still something to be aware of. BNB remains relatively centralized in terms of holders. There's a red flag in my book regarding this. Same goes for XRP. XRP is also highly centralized. Ripple holds a large portion of the XRP supply, and according to a recent article by Cointelegraph, wallets linked to Chris Larsen, Ripple's co-founder, still contain $9 billion worth of XRP that could be sold. This shows the risk associated with high concentration among blockchain founders or early stakeholders. We know that Satoshi Nakamoto supposedly holds 1 million BTC that haven't moved in a long time. It's great they've stayed untouched, but that's still a potential risk. 1 million BTC is no joke. I don't believe they'll ever be sold, but it's something to keep in mind. Let's also mention 10x Capital. They're raising $500 million to buy BNB. This move is backed by YZ Labs, the fund of CZ, previously known as Binance Labs. It's responsible for managing a lot of investment, personal investment, in fact, of CZ. And they could raise up to $1.25 billion. All of this is very bullish for BNB. The token is clearly outperforming the rest of the market. At the time of recording, it's around $800, but it hit $850 a few hours ago. Its market cap stands at $117 billion, now head of Solana. Yeah, hats off to BNB. The roadmap is ambitious, with major technical upgrades planned to make the BNB ecosystem even more high performance. This roadmap's update combined with major investment announcement are clearly fueling the token's rise. That's it for today's crypto news. I hope you found this valuable. Don't forget to like, comment, and subscribe, and I'll see you tomorrow with more updates. Bye bye.